Hey traders, what's going on? Jamie Saettele here with the Midweek Strategy webinar with SB Trade Desk. And before we get into the charts, let me know that you can hear and see. Pooja says AV is good. Okay, great. Well, I wish I had a whole bunch of new cool information to show you, but I really don't. It's a lot of the same stuff that we've been looking at. This is a crude oil chart. This is one of the better looking charts, I think. This is a 4 hour, but you can see we can scroll back and look at really over the last year, right? This is last April right here. And we, have come into and rebounded from support, good support. So we've got really good parallels to work with on the crude chart. I have this shorter term fork up here. It might end up coming into play, but I'm more concerned or focused on the bigger picture things, the bigger picture parallels, and really the red one, which crosses a whole bunch of supports before the breakdown in early March, that might end up being resistance, closer to the middle of April, all the way up at 53.87, which is actually where we opened the year. All right, so any weakness, before then into essentially the 49.50s to probably a little above 50, to me is a buying opportunity, or where you want to, look to get bullish again on crude oil. So crude is an interesting chart. Obviously the dollar chart, the thing that we've been looking at for forever, is same old, right? In that we have our dividing line, the red lines on US dollar, and it's kind of the moment of truth here. I guess that you could say that it could stretch a little higher. The market's going to make everybody uncomfortable, right? Bulls, bears alike. So I guess if you wanted to, or if the dollar wanted to, it could try to stretch up into the trend line, right? The bearish trend line, which would be all the way up closer to 12.380s. But really, and that would actually be a 618, wouldn't it? So that would be the 618. The 50% is 12.350s. That's a little more what we were thinking, right? As far as resistance. Remember, this is the short-term chart. I showed the 20-day yesterday, the 20-day average on this, which is what this arrow is all about, in the post yesterday. In the swing update, we looked at the 20-day, and again, this is a 4-hour chart, and you want to look at a 20-day average on a 4-hour chart, just put 120 period average on it. Okay, so this is a 4-hour chart now. Okay, so yeah, yesterday we looked at this. So the 20-day average in US dollar, if we're down, now, if this is it for a while, then I'd expect us to reverse off of it. So there we have it. Okay. Again, I'd expect something off this level, even if this is just wave A, right? Maybe it's A, B, C, something like that. We'll, but we have the minutes coming up later today, and yeah, FOMC. Okay, minutes. Not sure if people are expecting a whole lot, but that really doesn't mean anything, right? It's when the markets don't expect much, that's when you get the the shockers. So it's been a pretty dead start here so far to April, but you know exactly the levels we're looking at, right? This is it, 12.340s, really today. All right, and something off of there I'd expect to come off. So, that begs the question, where do we want to trade this? Or where's the place to trade? I still think the best place to do it is pound. Um, cable, it talked about the trend line early in the week on Sunday's post off of the October low, and I hate drawing it off there because, as described in the post, you can pick any data feed you want, and the low is going to be different because they're really, back here, this crash. I mean, different market makers had different prices, but as it so happens, if you draw it off this low on this particular feed, you actually get a really good slope. So maybe, the best way to do it is just forget about the fact that it's off this low and, just respect the angle, whether it's, off of this low or not, right? If that makes any sense. So, it's hard to argue with the fact that you've hit every single pivot, every single important high and low has been on, one of these angles. So your 75 line was resistance in February, right? The trend line essentially support back in March, and then just recently, on the 27th of March, we had resistance at the median line, which itself crossed through some pretty good, stuff. So recently, just on, I guess, the 29th, we bottomed, top side of this line, which we had, but it also ended up being the 25 line here. So, I'm still watching, basically, if you get a little more dollar strength on the minutes, I would watch right here, which is 2409, right? This was the chart I think we had yesterday, something like this. Let's see here. That's the Aussie chart, but yeah, here's the cable chart. So we've kind of been pressing up into resistance, 25, 2503, trying to be specific. That's a volume level, okay? From, if I go to hourly chart, you can see what that is. That's from right here. That was from 9 a.m. on the 30th of March, okay? That's a high volume level. So that level itself is still resistance within this range, all right? And then here's the close-up view of the parallel 2409. So really these levels are kind of all I care about at this point. 2503, 2409. If you do get the bigger drop in the dollar, the bigger drop in pound, the bigger rally in dollar, right? Maybe for some reason the minutes come out really bullish and they want to go to the higher level of resistance in the dollar index up at the 12,380s, then you're talking the 23,0217 area, which really would be a dream, right? That's huge, just huge, huge, huge. Even this parallel crosses some nice levels, all right? So I don't know if we're going to get that, but if we do, man, be ready, be ready. So much information out there that we have that says that we should be bulls on cable. Okay, we've got pattern, we got levels. Those are really the most important things. But from a bigger picture perspective, don't forget the record COT recently. Don't forget the analog, the seasonality. I mean, you name it, you name it, you name it. You've got, you could write a book about why we should be bullish the British pound. So that's cable, and that's my favorite thing at the moment as far as the trading levels and everything else that I've just mentioned. What about Euro, right? Euro got slammed last week, and we were taken out of that long. So, is this just a three-wave rally? I've seen a lot of people say this is just a three-wave rally before we go a lot lower. And look, I'm not going to say that that's 100% wrong because I don't know. Here's what I do know. I do know that we have the long-term charts indicating that Euro turned from a pretty big, important, well-defined area. I do know that US dollar, that index, has dropped below our bull bear dividing line, right? Just presenting the evidence at hand here. And I do know that we also have a series of higher highs and higher lows from the first day of the year, right? We call that the January effect. It doesn't always work out. It didn't work out last year, right? Last year, we actually made a low very early in January. It wasn't the first day, but it was the second day of the year. And typically, the statistics bear this out. When you make a low or a high in January and you follow through the next month, as we did obviously last year in February, the market tends to go to its other price extreme in December, right? So if you make a January low, you expect a December high. If you make a January high, you expect a December low. All right, so it didn't work last year. We'll see if it works this year. But as long as you're, within, the bullish trend line, I think it's okay to be constructive on euro. Now, what about the levels? Well, since the, ravaging here last week, we've got a really quiet range. Euro seems awfully heavy. 107.20 is the 20-day average, and that's this low here too from 321. All right. That is a spot that I would pay attention to if you did get a bounce in euro. I'm more interested in, about the 106 area, 105.99 in the lows from 314. So if we dropped there, we would have taken out everything from, excuse me, everything from FOMC in March. And that would actually put you near 105.90, 106 over the next few days into early next week, actually, right? And don't forget the seasonality component of this, right? The dollar, April's there aren't, a lot. We talk about seasonality a lot, but some seasonal periods are more important than others. And it's just a fact of the matter that there's a couple months out of the year that are, statistically significant, if you will. And April's one of them, and it does tend towards dollar weakness. It's more towards pound strength and CAD strength, in other words, dollar CAD weakness, but it's generally just, dollar weakness, right? So if we get a chance to buy a trend line, near 106 in euro, especially when everybody, their mother, grandmother, grandfather, whoever, hates the euro, I don't think it's a bad bet. So there's euro. Aussie, put it out last night. I wouldn't mind if this thing keeps failing up at resistance, if that's what it wants to do, okay. Wouldn't mind selling it up into 76, 76.05, 76.20. Okay, you've got 70. There's good levels really between 76.05 and 76.25. Actually, 76.25 is now where your month opened. So this is one actually that if you get a bearish dollar reaction on the minutes, there's also a speech tonight in Sydney from, you can see here, RBA, DeBell speech in Sydney. And that's actually just at 5:40 here Central Time, so 6:40 on the East Coast. I would be aware of that. If you do get a spike there, it'd be worth a sale, right? Maybe it's not on this route, maybe it's a little higher, maybe it's in the 76.20s, but I still like this idea of selling an Aussie bounce, just because the market, again, we're coming from that really big resistance, and maybe we do finally get down to this blue line, which is the ultimate buying point, I think, right? If we end up taking out the low from March, I'm sure most people will probably give up on this idea, and maybe that's what on the Aussie long idea, and maybe that's what needs to happen in order for for Aussie to be allowed to go higher. If I put on the the daily, right? The Aussie daily. I mean, you can see here, trend line, it's, a slow moving shift in trend, but eventually you're going to hold up on one of these things and it's going to be quick. So envisioning this coming into support, finding support, might be a little higher than 74.50 at this point, might be more like 74.70s, and then going higher. There's another thing down there too. If I bring in the, say from our levels, you still have the 52-week midpoint at 74.47, but you know what the 3-month low now is, or the 60-day, I should say, rolling low is now 74.80. All right. So a tag on a 60-day low, which we haven't seen since back in December, might be what's needed in order to take us higher again. And actually, this happened last year. It happened in May, but we had that move off the January low, okay, the impulse. We dumped for a while, and actually, once you hit the first 60-day low on May 24th, that was the low. We didn't make a 60-day low until November, which was actually another low. So, we're watching for maybe a 60-day low in Aussie to unleash the consensus bearish opinions, and then it will be allowed to go higher. That's my story, and I'm sticking to it. So yeah, wouldn't mind selling a little bit of Aussie if we get a bounce into the right level. Kiwi continues to look like hell. I have this impulse marked 1, 2, 3, 4, 5 up, but after yesterday, it looked like it might want to hold. Remember, we had a bunch of stuff. Really, it's 69.68, and it's not really holding, is it? So from here, I'm not too comfortable trading Kiwi at this point because I don't really know what's going on. But 69.27 is the yearly opening price, and you do have a parallel there. Okay, within this this channel. This channel's continue to hold. Obvious resistance at this point, still the trend line, monthly open, weekly open, 69.94. If we draw the actual fork, it looks like this is actually the median line. So I'll put that there so we know where it is. So maybe that is the area that you really want to pay attention to. I'm not sure if there's any big Kiwi stuff coming up, is there? On the docket. So I'm not sure exactly. Can you guys still hear me? I had Pooja just said lost audio. It's back now? Okay, all right. Pete says all good. Okay, great. So yeah, Kiwi, maybe it clears up. The markets have a way of all of a sudden, kind of ringing a bell and saying, "Oh my God, this is what I'm doing." So maybe they do clear up. If as far as Kiwi's concerned, like if I go to Kiwi here, this is the chart we had. We were looking back in March. We thought we'd get down and get the low at 67.50, and then basically after FOMC in March, the thing just went dead. And now it's, deciding to trade again. So It's that thing we talk about a lot of the markets having, kind of getting to where you think they're going, but in a very different manner. Like they, taking their time and taking the scenic route and, taking water break and, whatever. What's the one that I had drawn? I guess that was it, wasn't it? I'm not going to really spend any time on Kiwi here. I'm going to look at Aussie Kiwi a little bit. That chart's actually interesting. But just know 69.27 is the yearly opening in Kiwi, and if we do finally get a big dump, and 67.50 would be the spot. But again, that would probably mean that you get a stronger than expected dollar move. So, all right, dollar CAD. It is looking a lot, or so far, it is looking like, this one more high scenario that we mentioned last night might still be in the cards here to complete the C wave, right? So someone might say from a trading strategy standpoint, why didn't you just get out here and look to sell again on the new high? I mean, you could. That's really a matter of personal preference. For me, if the evidence suggests there's a pretty big risk of a fairly sharp dollar CAD decline, right? Like the COT stuff that we looked at over the last couple of weeks, and yesterday was another one. Didn't I put it in yesterday? Was it yesterday or was it 2 days ago? I guess it was 2 days ago. The 4-week change in Canadian dollar futures. Yeah, here we go. And this is going back, we're going back 15 years here. So it does, what happened just last week has not happened a whole lot. Basically, what you're looking on the bottom is the difference, the change in positioning between speculators and commercials. So essentially, it's the entire change in positioning. And when it's a really negative number, like it was, here, the most recent reading, that means that you had the most or extreme speculative selling, right, and extreme commercial buying. Okay, so when there's big events in the market, you want to be on the side of the commercials, and a big speculative selling opportunity or big speculative selling and big commercial buying means that you want to be buying the Canadian dollar, which means you want to be short dollar CAD, right? And you can see that you've only had this amount of speculative selling, commercial buying, and this is a 4-week measurement. So I'm measuring it over 4 weeks. I do two measurements, 1 week and 4 week, right? 4-week rolling is a month. So this has only happened 3 other times in history. Now twice you actually had the CAD low, which would be a dollar CAD high, that exact, that week, right? Back in 2005, you had to go another week. Okay, and then you got the dollar CAD high. Even this one, which doesn't look like a big move, was still like 300 pips. So once we have information like this, then I'm okay, letting it go against and go to 34.60 or whatever, and you've got the 5-wave move down. It's kind of all picture perfect. Plus, there's always the possibility, and I talk about this with a friend of mine. He's a much older guy, actually, but he's been around the markets for like 50 years, and actually an Elliott guy. And he says his biggest mistakes are actually when you're waiting for the final fifth and it never shows up, right? So what I mean by that is you're like, I see 1, 2, 3, 4. I'm going to get a fifth and I'm going to sell it up here. Sometimes it works, but sometimes you just don't get that fifth. And think about it. When you have Elliott, corrections, there's all kinds of complex corrections that you get. you can count this a number of ways, right? I counted this as A, and then I have this as A, B, C, but this could be A, B, C, and this could be a B wave, or this could even be three waves up, right? You could have A, B, C, A, B, C, A, B, C, right? Bottom line, the market has retraced a good deal, and we came, into 34.55, pretty close to 34.65. We've already retraced 618 of this, and we've got the COT. I'd rather be short than not short. That's kind of the deal. So that's my spiel on CAD and a little, strategy. Gary, I'm going to dollar yen next, man. He goes, my biggest mistakes are the abomination. I would appreciate your current views. You got it. Yes, it is quite the abomination, is it not? So we did pretty good to catch this move last week. We caught a good up day, which really got to pick your spots these days without much of trend action in the way. But yesterday and the day before, thought that I'd be getting along at 110.50. Of course, dollar yen goes deeper than I thought. Then I take a look at the Nikkei, and I'm like, well, crap, this thing looks like it wants to drop to support. And then if it does, it's going to take out stops, and it might do the same thing with dollar yen, and then we go higher, and then I get stopped out, and then it goes higher without me, and then I'm pissed. Gold, obviously still at resistance, which we'll get to in a minute. But anyway, dollar yen turns up anyway. All right. So look, we got the minutes. Let's get through the minutes. But if we finish like this today, I'm down with being long. And in fact, if I put this on, if I put the fork on, you'll notice where we bottomed yesterday, the 25 line, right? So we want to go to the 75 line up here. So we might get back to 112.80 or something. 112.80 be 50%. And who knows, maybe more, but that's what I'd be looking at for now. And again, this is, this totally goes against thinking that the dollar is going to roll over. But then again, we've seen the dollar and yen actually move together a little bit over the last few days. So maybe we go into more of a yen story. So here's the daily chart. If I go a little shorter term for timing and stuff and where I'd want to be entering and whatnot, here's the 4-hour chart. We do have, you can see our monthly weekly open here, 111.39. We tagged this morning. Did come off a little bit. The median line, same thing you just saw on the other chart. Up here, and you've got, former levels, 111.50, or sorry, 111.60 to 111.70 would be a barrier on the near term. But I'd be wanting to buy essentially into probably about 110.90 at this point. Again, assuming that the minutes come out and we don't go like, through the floor, right? If we're holding up here, then, after today, say we get a move up into 11.60.70, that'd probably be even better than buying a little bit of weakness into 110.90 to me is probably a pretty good, is a good bet. And let's go 60-minute now. One, two, another high, you'd get 1, 2, 3, 4, 5, 3. Maybe the next dip is a 4. And this is actually, so if you guys were those of you that were in the, that came into the alerts thing that I did last Thursday, this is actually a really good example of when I would turn on the alert. And I think that should start today. I'm not sure if you got the email yet or if you're going to get it later today, but Mike told me that those should be getting sent out. Excuse me, I just took a sip of coffee. So again, this is an hourly alert, and Yeah, Pete says got the email. Okay, great. So this is the hourly alert. But since I know that I have all the levels and everything all outlined, I might go actually into, I would turn off after, again, assuming today that we're holding up well and that we have maybe at this point, maybe we have a 1, 2, 3 by the end of the day. Maybe we're up at 1170 or something. I would turn on the alert because I would want to get I would want to be buying a dip. And maybe it doesn't get all the way down to 110.90, right? Maybe it only drops down to 111.05. But I know that I want to buy a dip in dollar yen and probably on hourly basis because 4 hours not yet even in an uptrend, but we're coming down from support. So your alert would look, it'd look like this, it'd look like this, right? Now you don't want it like up here, you would have failed miserably. Eventually, actually would have held up for a little bit. But I wouldn't be turning them on up there because we were at resistance. In fact, this was our target. This is where we got out of the long. All right. So again, it's very much a combination of discretionary, but with a systematic alert entry plan. Okay. All right. So that is where we are with dollar yen. Again, might be turning on the alerts for a long tonight in dollar yen. So that could be interesting. Yen crosses are interesting. Gary, does that satisfy your abomination fixation? Are we good? Essentially, the levels or the levels you have in mind the levels that I'm looking at. That's the biggest thing here, and it's yeah, okay, yeah. It's again just write them down. 1160.70, 110.90. Eventually maybe up to 112.80, 112.90. That'd be the dream. Just living the dream, they say. All right. Yen crosses. There's a couple interesting ones, and you can probably guess which ones I like, given what I've talked about with the the dollar crosses. Pound yen's the best looking one. Pound yen is one that could really surprise to the upside. Vladimir asking about copper. You got it, Vlad. We will take a look at copper. So here's the lower parallel on pound yen. Look at this thing just leaking lower. Eventually it's going to rip higher. At least I think so. I'm glad that we have been really patient on this because it would have been really tempting to buy it, coming into this week. If you recall, we were waiting, I should say. What the heck? All right. We were looking for an impulse higher and we never actually got it, right? If I go to the 60-minute, you can really see it. So this week we were coming in and I wrote in the Sunday update, we're going to get an impulse higher, 1, 2, 3, 4. If we get that one more high 5, the next dip is a buy. We never got it. Instead, it just went to the lows and took people out. So, we're back to looking for an impulse higher and then buying it. So again, it's exercise your patience, but this could be a really, really big opportunity. And it's up to you how you want to do it. If I see the setup and it's it's clean as day, then I'm gonna put it on in the updates. But it may be that you end up long pound dollar, long dollar yen at the same time. Okay. Just for a little more info. Here's pound yen. We talked about with Aussie the 60-day low thing. Well, guess what? pound dollar traded to its first 60-day low yesterday and is now turned up. 60 days, 3 months, right? I'm looking at, when I have this workspace up, I have weekly, in which I have 52 high, low, and midpoint for a year, 52 weeks. 60 days on the daily chart, 3 months, quarter. 20 days on the 4-hour chart, which is 120 periods. And then 120 periods on the hourly chart, which is 5 days. Okay. So I always know where the 5-day, 20-day, 60-day, and 52-week high, low, and midpoints are. And in this case, if I am making the assumption that, that pound dollar or pound yen, excuse me, has entered at least a sideways trend, right? And maybe even an uptrend because of the impulse that we have higher from October of last year. Little A, B, C. Are we done? Are we done yet? 60-day low is a good place to stop. Okay. In fact, on the way down, the only time we reached a 60-day high was in May of 2016, right? So if you have an idea of trend, maybe, the 60-day high low can really be a gift. And just let's look back at on the way up throughout the big yen devaluation, uptrend that happened back in, 2013, 14. Each time you got to a 60-day low, it was the low in pound yen, 60-day low. Okay. 60-day low here, 60-day low here in October 2014. That was before BOJ went nuts. 60-day lows in February 2015 and April 2015. Actually, this was one of my best trades that I've ever had, was long pound yen down here. And we took that for a ride. So we might be repeating that. We're on the 60-day lows in pound yen. So it's not, it may be that we're done here. That's all I'm trying to get at. That we're ready to go. So yeah, love that chart. Even euro yen, for crying out loud, you could make an argument that even euro yen could be, and I'd rather trade pound yen, but you could make an argument that even euro yen could be basing down here because of the channel, right? Draw a trend line over the top and then draw your parallel, and you can see that you went through it yesterday. You could base down here. Okay, again, remember previously I thought this was a triangle. Well, it wasn't. I was wrong. 2 equal legs is 1703, so you didn't quite get there. I don't know if that wants to be tested or not. But pound yen's the one I would stick with. CAD yen. On the weekly chart, it's still interesting in that you're testing, the old trend line and everything. Pound might be more bullish than CAD, but this is still something to look at. At this point, might as well pick the best one. And at this point, it does look like pound yen is better than CAD yen, better than all of them, really. All right. Wanted to take a look at Aussie Kiwi quickly, and then we're going to look at whatever markets questions you guys have. Like Vladimir asked about copper, and we're going to look at that. Copper's up pretty big today, 2.5%. Aussie doesn't care. Excuse me. All right. So Aussie Kiwi. Okay. So a couple weeks ago, I think it was, yeah, a couple weeks ago, I put up this chart. Essentially, we were looking for maybe a pullback into the former resistance, which is 107, basically 107.50, 107.70. Okay. And you can see now actually that if we were to drop from here over the next couple of days, you would get into that level, which is on the parallel. Okay. It extends into next week. So, what's important about this chart? Well, the big thing is that we've entered an uptrend and we want to be, identifying corrections, which means sideways to down in order to buy. We're getting a correction. We started one in mid-March and it could end at 107, near 107.40 because that would be two legs down from the high at 107.39, right? Although I wouldn't necessarily wait for that. I would be looking at maybe 107.50, 107.70. Okay, the other option, of course, is that you go into something of a triangle. And you can see how the alternating leg at this point is 618, right? A, B, C. So you could get a D and then an E and then go higher. So that would, if you're in a triangle, you're going to get sideways for a little bit. And again, RSI on the daily, quite useful. Overbought, dip, finding support at 50 is a very strong uptrend will do. It won't even get to 40, okay? So Aussie Kiwi is one that you should keep on your list. Really as 107.70 is your spot. But if you don't get that, don't worry. You're probably going to be sideways for a little bit longer to finish up a triangle of some sort, and then you can go higher. All right. And the next target on this would probably be up, could be all the way up at 112, near 112.50, because that would be the measured target. So if this is going to play out, maybe Kiwi really is in trouble. Okay. Copper. Vladimir's asking about copper. You got it. Let's take a look at copper. Every time we come off, I think we're going to get down here. And every time I think we're going to get down here, copper goes higher again. So this is the daily. I mean, there's no downtrend here, that's for sure. Okay. My only concern is that as far as being, like, I want to be bullish copper. Well, I am bullish copper, but I'm not long copper. I want to buy it down here. I've been saying it forever, but that's just what it's what I want to do. I want to buy it at support. So this is all very complex and a correct, everything since last November is extremely complex and corrective, right? All these three-wave movements, right? Down from here down to here is a three-waver. Here up is three waves. Let's see if there's anything retracement-wise on resistance. Well, you got 272.20 to 618 is a little higher. You might be able to see it easier on the weekly chart. So actually, weekly reversal resistance here. And this is another reason why it might be okay to actually be short Aussie for a little bit and take it into what we say 73.50 to maybe even 73 or 73.75 or so, 60-day low. I feel like copper still needs to get down to this level before it's allowed to really move higher. And that probably means that Aussie needs to do the same thing. So Vladimir, if you're looking at copper here, know that essentially 270.65 to 270.220 is going to be a pretty good zone to look for failure on the upside, okay, from this move higher that we've got today and over the last few weeks, although I wouldn't really call it a move higher, it's more of a move sideways. And essentially you're going to get down, up, and then one more down into this support. And I want to see where you would potentially get, say, 2 equal legs. Well, you'd have to go a lot higher, wouldn't you? So I wouldn't pay attention to that. Let's see if there's anything on the near term as far as copper is concerned. Yeah, you could get a failure over the next session or so. Okay. Yeah, you have good resistance up here. This is good resistance up at 270.60 to 270.220. So that's Vladimir and everyone else. That's what I would be looking at for copper. I would look for failure over the next day or two, and then for it to roll over before heading higher. Let's look at gold. So if we look at the gold 4-hour, you can see the waves, I think, pretty clean. So we've got a 1, 2, 3, 4, 5. That's the leading diagonal, right? We got the sharp decline. Remember, we were looking for 1180 back in March. We never got it. Instead, we bottomed closer to 1200, or closer to 1200. But you can count this as an ABC. So this would be A, B, C. Okay. You've got another impulse higher, and you can count them as 13 waves higher, okay, or 9, depends how you do it. But 1, 2, 3, 4, 5, 6, 7, 8, 9. And it would be great if 1261, yesterday's high, actually, yeah, it was yesterday's high. It'd be great if that was a decent high or the high for this impulse, because the 618 of this is 1220, and that's exactly what we're looking for anyway, which is, the high from January 23rd, and it was support in February on the way up. So, if we can get a little weakness, 25 or so bucks from here, then yeah, you're probably going to get dollar yen higher, maybe a bigger dollar push than we thought. But that would be okay, because at that point we'd probably be long dollar yen anyway. And it would probably give you the better opportunity, the better entry for cable. So obviously gold is always an important market to have a handle on, but especially right here, because it does seem like a pretty important turning point. In silver, I'm not quite sure. We've broken through this trend line. To me, I wouldn't chase here. It does seem more of a trap than anything else, given the gold comments. Okay, silver probably still a good buy on weakness, but I wouldn't want to be getting too involved after a run like this. You know, it would have been better, I guess, if you would have failed closer to the trend line, but whatever. If we come back into the trend line, consider it confirmation of a failure and then look for support, at a lower level. But at this point, the gold chart is cleaner to me. All right. Anything else? Questions or anything before we wrap this webinar up today? Let's take a quick look. Oh, Euro Pooja asking about Euro Aussie, sure. So Euro Aussie. So we step back and remember where we failed. We failed at the 618 of basically the year range, right? Is the 1230 range, but that spike high on 1230. But yeah, so we failed up here. You see where the square root levels are. Excuse me. So this to me is A, B, C, probably 1, looking for a 2, look for a 618 retrace. 4170, which guess what is a square root level anyway and really close to this high. So Euro Aussie, glad you asked about this because this is a pretty good level. Euro Aussie 1.417080 resistance. If we go to might get a little A, might get a little B, might get a little C. Ooh, that would be perfect, wouldn't it? So I would look at 140, basically support near 140.10 or so. All right, you can see the very clean levels that you've got at 140.10 and 141.80. See if there's anything on the averages up there. Yeah, the 5-day is there. I wouldn't really pay too much attention to that, but the bigger move, in my opinion, in Euro Aussie is probably on the downside, but it could stretch up into 41.70.80 first, right? The big thing is that this is a three-wave move, right? This is A, B, C, okay? And you haven't really broken down just yet. It's kind of a false breakdown at this point. So that might provide impetus for you to move a little bit higher into 41.70.80. And then it can roll over. So yeah, there's kind of two ways to approach it. If you get a dip and see some basing around 140.10, then I would, actually be looking at maybe a little long position, which would fit well with Aussie getting a bounce and then selling off. But then 41.70.80, I'd have, kind of highlight that area as a level for bigger failure on the upside. So those are two good spots. Here's the system we had here. You can see again the emails. I think some have gone out, some will go out tonight. But you can see we've had this is the 10-minute system. The euro. We've had some good shorts. We've had some shorts that didn't work out. A lot longs that didn't work out. This is over the last couple of days. Good long here actually yesterday. Actually shorted this rally this today, which is a good short right here. And again, the 4-hour stuff, there's not a lot going on because there's not much of a trend right now, right? Although it did short this consolidation in euro. So yeah, this will be up and running pretty soon, I guess, with the emails going out, as in today. All right. Anything else before we wrap it up here and move on to the minutes, which I guess are in an hour? Going once, going twice, 3 times, and we're done. All right. So, very, very, very quick review. Dollar, coming up into resistance, but expecting some sort of a reaction at the 12,340s, which is in like 5 points. See what the minutes do. Dollar yen, clean levels, right? Very clean levels in dollar yen at this point, 11.60, 70, maybe 110.90 support, maybe a little higher, like 111.05. Cable still range, but again, knowing that we probably want to be on the long side. Even if it drops as low as 123, it's a screaming buy. 125 still resistance in the interim. Dollar CAD might poke to another high. I still like it short for a lot of reasons mentioned, positioning, the COD, 5 waves down, all that good stuff. And those are the biggies, right? Those are the big ones. The S&P 500, which we actually did not talk about today, but the S&P 500, I think you don't want to overcomplicate it. I really think that this is it, right? I think that your red line is resistance and your blue line is support, and just the channel to follow. I mean, really, that's about it, right? So you have A, B, C, but after a run like this, probably do need a little more consolidation than just this. So that would mean that you're going to go higher, right, into the red line. So A, B, maybe lower in the C, D, E triangle, go higher into a May top, but that's a conversation for another day. All right. We'll get there when we need to. Okay. All right. So I really am closing it down this time. Everybody have a great rest of your week and good luck today with the minutes if you're doing anything on them. If I am, of course, I will send out a tweet. But other than that, I'll see what the day brings and we'll have trade ideas and whatnot out later today. Okay. Take care. Bye.